Welcome to the Just Word Podcast. I'm Pat Bolland. The Just Word Podcast is brought to you by Just Wealth, investing the way it should be, just for you. Insurance is a good idea in general, but did you know that you can also use it as an investment vehicle? Well, Shara Carr and Todd Strauss will be joining me to talk about that. Todd Strauss is with Serenia Life, and Shara is the Chief Operating Officer of SOS Financial Group and the Chief Operating Officer as well as co-founder of Lionsshare Wealth Management. And they'll join us right after this. Todd, Shara, thanks for coming on the podcast.
Thanks for having us.
People don't often think of insurance as an investment product. Why do you think that is?
That's a great question, Pat. I think to start with, that's because standard traditional life insurance is viewed as a payment for a product. You pay a premium, usually monthly, and your beneficiary receives the lump sum you purchased. That's the main purpose for life insurance, to financially care for loved ones who are financially dependent on you. In fact, for that reason, many think of it as death insurance. The cash value that builds up in some insurance policies is an added bonus. However, wise investors looking to mitigate tax risk and minimize the risk associated with investing in the market, who have the right consultant and are becoming more educated about how they can use certain types of insurance to diversify their investments, grow and or transfer wealth more tax efficiently, gaining a rate of return that vests each year, grows tax-free, and can be taken out potentially tax-free or definitely tax-advantaged during their lifetime.
Okay, but as I understand it, an insurance company basically takes your money and then gives it back to you or gives it back to your estate or whatever at the end of life. There is a tax change, a tax profile change. How does that work?
Yeah, this is one of the non-traditional benefits of a client owning life insurance. You're moving your money in a lot of cases from a taxable environment into a non-taxable asset. Now, that money, we call it a premium, which the client pays to Serenia Life. This money gets invested in what you can call the PAR account. On the policy anniversary, which is 1 year later, the client earns a dividend. The tax profile changes based on the various withdrawal options during your retirement years or at any time you choose to utilize those funds.
Oh, wow. Okay. It might be simpler to walk through an example.
Yeah, for sure. So no, this dividend I just talked about, it's not guaranteed, but we have always paid a dividend in over the 70 years we've been selling this type of product. So it's pretty well guaranteed, we like to say. The other reason I like to say it's pretty well guaranteed is once you earn that dividend, it's vested and it can never be lost. You get growth on your asset and it locks in. Year over year, it grows and it locks in, it grows and it locks in. With that in mind, triggering any one of the various withdrawal options allows the funds to be redeemed tax-free. For example, if someone has been investing in a PAR policy for 20 years and now has $100K of cash in that policy, depending on which method they use to withdraw or leverage it, they may be able to access it tax-free or tax-advantaged.
Wow. Does it affect your other investments? And I'm talking about RRSPs or tax-free savings accounts.
No, not at all. This is independent of any other investments like real estate, savings, or pensions, as well as the RRSPs and TFSAs. Totally independent.
Okay. What about when you take the money out and you unwind it, does it affect old age security? I actually just filled out the forms for OAS, so I know what that involves, but as well CPP or registered retirement income funds.
Yeah, your government or registered retirement income streams, they're not impacted by this retirement income stream because it's not reportable as income. As you know, for example, you just gave an example, a RIF or income can cause a clawback on your OAS benefit.
Right, exactly. Okay, so now you've designed a specific product in this whole space, in the insurance space overall. Why did you do it, and how did you do it?
So I did it just by coming up with it. I mean, the concept of tax-advantaged wealth building or a transfer of wealth has been around for decades, and it's known by many names, often linked to what the end goal might be. In my case, I chose to use a name that means something to me and highlights one of the biggest advantages of using the concept. So I call it Keep the Lion's Share, or KTLS, as a nod to my dad, who introduced me to the concept when he was in the industry and I was a young adult. His name was Lionel, so the first four letters of his name spelled. And then that went on to become a strategy that we implement at Lionsshare Wealth Management, which is a division of SOS Financial Group. And then also because in addition to growing your money for yourself and or your loved ones, you give less to the government and keep more for yourself or your beneficiaries. So who doesn't want to keep the lion's share?
Okay. Yeah, exactly. Who doesn't is right. But in terms of the product that you introduced, is your product different from your competition, or is there competition?
Well, the product itself isn't a product that I've introduced. It's just a strategy that we implement. It's unique from other investment vehicles in that it has growth that's more reliable than in the market. It's tax advantaged and can be leveraged using corporate retained earnings without necessarily having to pay it back during your lifetime. As part of a comprehensive and customized financial solutions strategy, it provides an opportunity to diversify your investments in an environment that minimizes taxes and allows you and your family to keep the lion's share.
Okay, so then where can you go to learn more about either your product, as you describe it, or other insurance products? Because there must be other similar products in the marketplace.
Absolutely. And we definitely audit the market whenever we implement strategies for people. They can go to Lionsshare Wealth. So that's with two S's. So lionsharewealth.ca, and can email me or arrange a quick call with me straight from the website.
Well, that's cool. And then just to, as a recap, if you will, describe the product again and how it's different from other investment vehicles and why people should look at it now.
So the product is an insurance policy that's used during your lifetime that you can leverage in multiple ways. You don't have to use it during your lifetime. You can use it to transfer wealth as well. The growth is growing tax-free. You can use it you can get a collateral loan. You can do all kinds of things with it to reinvest in your business, to live the kind of lifestyle that you want to live. You don't have to pay it back during your lifetime, and it's not reportable as income.
And Todd, I mean, back to your point, if you will, just for a moment, you can take money out of the policy at any time. Am I correct in saying that?
That's correct. And it's very liquid. It can be accessed within 24 hours.
Wow. Cool. Thank you so much for your time, Todd Strauss.
Thanks so much, Pat. It's been a pleasure.
Todd Strauss is with Serenia Life, and Shara Carr is with SOS Financial Group, as well as co-founder of Lionsshare Wealth Management.